Hey, it's Mark. Got an update here. I went through a bunch of charts yesterday. As you can tell if you watched the video, it's a pretty long video. So I'm just going to talk about the ones that I found on yesterday that I didn't actually trade today, but it's still set up like on this JMIA. This JMIA, it did a huge run from $2, twos to $8, and it's kind of it's over the years it's kind of been like it's been an underperformer, and it hasn't really been a good fundamental story, but it seems like the fundamentals they turn around a little bit, but it's still it's a China name, and or at least it's Asia, and the breakout here was huge off of that out of the trading range. It did that base that I've gone over so many times in these videos. Broke over that last level, and then got into a new trading range there. And then, but the thing is, it went up so fast. It went up from that 5 break, pretty much where the trading range was, up to $8 in like 5 days, pretty much. So it got a little ahead of itself, and you can see on that spike day there where it failed intraday and sold off the rest of the day to finish near the lows, which is a shooting star candle. So that's kind of gets you into the psychology or even just the algorithms of what they're doing during the day. So they sold off toward the end of the day. It didn't hold the gains like it had on previous runs. Like most of these days where it was green, it finished kind of near the high of the day. And that was just a really potential reversal candle. But then when I put it up against the Bollinger Bands, it's another indicator, 2022, I use those. It was above the upper Bollinger Band significantly, even in the print. So the shooting star, when it prints above the upper Bollinger Band, that's kind of like what I call like the kiss of death. That's like it's not good for the stock, because it's overextended, and it's already had a shift with the candle. Excuse me. So yeah, I don't know what I was thinking today, but I forgot about this one. And I was gonna put the puts on today, and it looks like there's some really nice entries because it went all the way back up to let's see, check out the intraday. It went all the way back up to like 7:20 in the morning. So that was like the perfect entry would have been there, of course, because it basically retested. See, it's in the levels here. So yeah, it had a level there. It went through actually. So they trapped a bunch of bulls there on that level break, because it went through that level there that had been a level. So they trapped the bulls there, and then just instantly reversed on and took out the lows again there. So looks like the trading range today was pretty much there and down to there. So, but yeah, I think this one's still short, and it's got liquid puts. It has liquid options too. So like I'm still gonna expect one more red day off of this. It may just go straight down. Sometimes they do that. Especially if it wasn't a serious accumulation. But yeah, I'm a little late here, but I may put on a speculative, just like a small position, just to participate if this thing just does drop again. Because the candle today was really bearish too. It did another shooting star like yesterday, but we're back inside the Bollinger Band, so it's not the best setup, but it's still, especially if we do get a pullback here for a week or so in the market, maybe I think it still has some legs. It looks like the Russell is down again. So yeah, it's because I think the JMIA is a really small cap. It's like a small market cap, so it's probably gonna sell off hard if it does. So yeah, the other ones I had an amazing trade. Like I had my best trade in like months. I think like I kind of been in a slump, and because I used to have a lot of options winners, you know, like every week. But I managed to pull a rabbit out of the hat today with the Tesla short with the TSLL puts. Like just as I talked about in my video yesterday, the Tesla set up short on that channel support break there, and that was off of the news and deliveries in China. It came right after the delivery news, so I think that was the thing, that was the catalyst. But regardless, it's still, you know, it's acting really bearish off of that, and I think it's going to go down to test the lows like 175. So I had to take that. I took that position off today because we're already down 2 days in a row, and Tesla can be tricky sometimes. Like especially in these down moves, you know, it's probably not going to have. It has more downside, you know, short term, but I just had to take the gain because I had to protect my portfolio with some of the crypto losses I took. Even though I'm just gonna hold, they're just buy and hold like the cryptos. I just had to take that to protect my account really. So it was like an 800% gain on the, and I suspect that was probably more than I would have gotten from straight Tesla puts, because I've had puts in the TSLL, and this one, so it's just a bull ETF, and I hope there's not that noise again. Like I think it might be the microphone makes this kind of like rumbling noise sometimes, but my other one was the stocks. I had these puts on to play the semis, and it looks like there may be a pullback coming here. I mean, it's really not even down much. Like I was saying yesterday, I didn't really like how it gone up so fast out of that channel it was above the upper Bollinger Band here too. Like so. It's just do a pullback, you know, if we go above the upper Bollinger Band like that. So it's still acting healthy back in this channel here. So as long as it maintains this uptrend, you know, in the near term, it's really bullish. I mean, it could even drop down like it did there and come back, but it's got to hold, you know, it's got to hold momentum. But like I've been saying, you know, it wouldn't be bad even if, I mean, we can get a pullback in tech to like, you know, half the move from this year and still be in pretty good shape technically, you know, because we're still the highs are still in the works, you know, like a lot of stocks are making highs still. The crazy thing I saw was the KRE spiked today, and that's just kind of the most surprising thing I saw, because I haven't really checked everything yet, but the KRE spiked. I'm not sure what that was, and it's kind of surprising. It was small caps down, and pretty much looks like we were down across the board. I'm just gonna go through my scan real quick and see, because it seemed really bad. Like when I checked my crypto stuff, and my crypto was down a ton. I mean, but I'd already had huge gains in it, so it didn't kill me. But because I've just been holding crypto for like a year or over a year now, and can't even remember when I think I bought it like 2 years ago or a year ago. So it's been a while, but I'm just trying to see what happened to the market today. Yeah, I think there it looks like there's more selling pressure overall. My gap down scan has I can kind of go through these scans and see what really happened. Like my gap down scan here is 57 results, and on these bullish days, it's only been like, you know, less than 20, like 7, you know, nothing. And in the 52-week high scan, let's see what that did. See, that's not bad, like, because I mean, we had the regional banks went up, so it can't be that risk off. But it looked like risk off in the crypto, so. And it's a good thing I didn't buy these miners, like the crypto miners, because I'm guessing they're down a ton today too. Like it's almost like the big shops knew that they were going to pull a rug on crypto today, so they never really bought the miners, right? Just kind of, you kind of expect if you expect the most mischievous stuff from the big banks and the hedge funds and stuff, you probably won't be disappointed. Well, yeah, let's see what the miners did real quick, and then I'll just wrap it up because I haven't even gone through scans yet. It looks like there's probably still some good longs out there. And let's see. Yeah, let's see what these miners did. Probably down even more. Yeah, man. Yeah, I was still thinking of putting puts on those. It's still probably not too late. I think thinking about it now, that probably would have been the best hedge. Like because I have so much crypto, you know, that could have been my hedge. And I might just go ahead and I might just put on some puts as my favorite ones, my favorite short ones, because the crypto may or may not be done. I mean, Bitcoin can do some wild stuff, so it's not really surprising it pulled back this much, but some of the other ones, like the shitcoins and the stuff like those are a different story. Or the let's see, the SHIB. Yeah, that's kind of a big pullback in SHIB. So yeah, I cherry picked the Wolf and CIFR. Looks like the Wolf got really hit today. I mean, it wasn't surprising. I mean, we took out that level there, and then, you know, once you break down, the momentum is down. So the momentum switched back here when it failed to do a bull flag off of that. Like it tried really hard right here. See the bull flag, and then they just failed, and then we came back. So this one might be my favorite. I think it can go to like 140 for sure. So I probably will do that instead of just shorting Bitcoin ETFs or something. The BITO has more volume than the bear ETF, so I always look for BITO for puts or calls on Bitcoin. But I think if you have a lot of crypto, it's a good idea probably to protect that with you know, if that's for you, to protect it with like some puts on BITO, or some kind of protection, you know, if we do actually drop here and keep going down, because it's been a hell of a run off the lows. But at the least, I think, you know, it's gonna. I don't see it taking out the highs anytime soon. I could be wrong, but it's probably going to consolidate here. And yeah, I mean, a lot of these mining ETFs look pretty good on the short side still. and he's just so slow. I don't know. Well, I guess I mean, it does have hasn't really broken down yet, but yeah, the Wolf BITF. I think the Bino still has the most liquidity on the options. I'm not even sure the new ETFs have options yet. I don't know. I could be wrong, but it's usually a good idea to pick one with the most volume. See Meta pull back. Yeah, it looks like just a healthy correction for the most part overall here. It looks like they moved into some things. They kind of moved into some things that they hadn't been touching before, like the banks there, and because like the Soho's up off that support a little bit. So this is probably my favorite undervalued stock right now, the Soho, because it's trading for around its net tangible asset value, and it's a deep value stock. So like the assets aren't being appreciated because it's a hotel company. So they've got a lot of assets, and yeah, I think let's go through one more watch list real quick and see. Looks like uranium hasn't done much. It's kind of a fake out. I bet there's a lot of biotechs moving still. Yeah, what's this? Oh, the IMMP broke out today, or at least came up, trying to break out. IMMP. That one's interesting. That one didn't work out at all. AMRN. These biotechs are pretty wild sometimes. I was looking at these gold, like, because gold was up too. I was looking at some gold stocks, like yeah, HMY was a good breakout. The HMY had a nice breakout. It's a gold stock. See the breakout there. And let's see what gold. I was looking at gold earlier, and like it looked like it was gonna actually just test this pennant it was in, but it broke out, and then it's just like a major breakout, and it's still gapped up again. Wow. Yeah, it's so strange. Like when you see gold move like this, it's usually it's breaking out. It's usually related to like the economy, or like worries about the economy or something, but like there's nothing really on the horizon in the near term to do that. So it's kind of strange. I guess they could move it, so they moved it. But yeah, usually like gold, like as far as like huge bull runs, it's when there's like low rates, and as the Austrians would say, a lot of money printing, like, so there's not really that right now. So it's kind of strange. You think the thing it would do would be to fade it, actually, like if it does pull back, it's probably more of a short with the way the economy is right now, because it can be like if like 2007, like 2008, it did okay, like leading up to the recession, but well, actually it was after, because it's kind of like, I guess it was like it's like an uncertainty trade. Usually it's like an uncertainty trade, so it might be a good short once it's done running, because like we look back here, it's like it spiked in 2022 too. But it's strange because it spiked in the first quarter, or basically second quarter of 2022, when the economy was actually slowing down a little bit. Like the consumer spending. Like it wasn't. I mean, and the GDP was flat too. So it was the closest we got to recession was right then when gold was spiking. So like this kind of proves my point again, I guess, about gold. It spiked in 2020 with COVID. So it's an uncertainty trade. It had a good run in 2020, but it was even up in 2019. So, and then spiking again, a breakout. So yeah, it's something I'm gonna keep watching that because it could be trying to tell you something, but it could just be a fake out. So yeah, I'll just wrap it up on that, and we'll call it a day.